Interest rate hikes are inevitable. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of Heise Says. Grab your stein of coffee and let's have a look at some mortgage broker news from Canada. So the Royal Bank of Canada's McKay gives verdict on hiking interest rates. Now we're not alone here in Australia with insanely low interest rates. All over the world we have such low interest rates. Canada they've got their own property issues over there where the affordability of housing is just as insane as here. I think New Zealand is leading the pack. We're second in the world with debt to income ratios. It is just going crazy everywhere. It's just nuts. And the question is, will interest rates, will cash rates start to creep up? And the reserve banks, they think, well, they can respond to the market to try and manipulate it at a certain level, but there'll come a point where they can't anymore, or inflation will start to be noticed by the masses. So multiple inflationary pressures will force central banks to start raising interest rates as soon as next year, according to the Royal Bank of Canada CEO, Dave McKay. So there you go. As soon as next year, central banks will start raising interest rates, and it won't just be one. And Australia, we can't run alone. We'll just go with the crowd. If others start raising rates, we'll start having to raise it too. Among the leading factors will be the strong economic growth expected in the second half of 2021. But is it real economic growth, or is it just economic juicing by the central banks? This will be impelled by mass vaccinations and substantial consumer liquidity, which McKay estimated to be in the order of roughly of $212 billion in Canada. The segments laboring under the worst effects of the pandemic, such as hospitality and food industries, will likely enjoy the strongest recovery, he added. So similar to here in Australia. Well, here tourism is being impacted. When you look at input prices, commodities, labor, goods and services, we see inflationary pressure building earlier than later, he told Bloomberg. This optimism ran counter to the view of more than half of economists recently polled by Finder, who predicted that the Bank of Canada's overnight rate will remain on hold up to at least 2023. Well, just because 52% of the economists polled doesn't mean it's accurate. How often are economists incorrect in their predictions? Because it's an art, it's not a science. And the problem is with complex systems, with an emergent systems, which are economies, you can't actually predict it to insane level, or to any level of accuracy. The further out your predictions are, the less likely you're going to be correct, due to just simple unknown factors. And it's an emergent system, so you can't really capture everything. Even if you capture everything, the emergent outcome is more complex than the elements that comprise it. I know people are trying to, but still there's already unknown factors. And here's an interesting thing. I was talking to a gentleman yesterday who was telling me he used to take economist predictions seriously until he realized that often when they're working for organizations or companies, they have a clause that they need to achieve a certain amount of media exposure. They need to get exposure, they need to get out there, they need to meet people and talk to them, or they need to just get exposure for the brand. If you're hiring an economist making all these predictions, you want them to get exposure. So could that be why? Could that possibly be why? Maybe that we're starting to get some more outrageous claims or predictions appearing from certain economists because, well, they've got a quota to fill, KPIs to meet, they've got to up their wages. Maybe. So another 38% believe that the rate will move upwards in the second half of 2022, while just 9.5% believe that a hike will happen early next year. A major consideration will be the need for the Bank of Canada to maintain its inflation targeting strategy, in which the current record low rates play a crucial role. Despite Canada's vaccine rollout, we will have a month or two lag in reaching the same level of vaccinations as the US, and that will translate into a delayed restart to some types of economic activity, warned Avery Schenfeld, Managing Director and Chief Economist at the Canadian Imperial Bank of Commerce. So, what is concerning here is more and more we're seeing everything is being pinned on these vaccines to allow economic activity to restart. Let's hope it all works, everyone. Let's hope it all works. So here we have it, predictions of according to the Royal Bank of Canada CEO, that the central banks will just be forced to start raising rates next year. That they'll be forced to do it. And if we look at what's happening in the bond markets around the world, makes a lot of sense. So what do you think, everyone? Do you think we'll start to see rates going up in central banks? Will Australia just go along for the ride? And do you think it will actually then filter through to the property? What crazy things, this is the real question to ask you all, what crazy things do you think our government could come up with, here in Australia at least, to ensure the housing bubble keeps going? Mortgage keeper, anyone? I know it was a joke I'm making, but still, what do you reckon? So there we have it, some news out of Canada, which, well, it can affect Australia. Don't kid yourself if you don't think it won't. As always, thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I will see you all next time. Bye for now.